the margin of diagnostic businesses have also gone up. That's the segment-wise situation. And coming specifically to the numbers, API business has gone up by 60%, which is huge, from 116 crores quarter to 185 crores quarter for the quarter. Diagnostic devices is almost double, from 45 crores for the quarter to 90 crores for the quarter, so almost 98%. Finished dosages, as I shared with you, we're still on the path of recovery as compared to the last quarter, last year same quarter. It is 4% down, from 35 crores to 33 crores. So hopefully this quarter it should come back. But fortunately, the OTC business, Dr. Morepen, has done very well this quarter as compared to the previous year, same quarter. It's 53% up. And as we shared in our last call that your company had launched many innovative products for the COVID care, whether it is sanitizers or disinfectants or facial masks or immunity products. So all those COVID products have helped Dr. Morepen increase in top line from 53%. So basically, finished dosage and OTC both are operating in the same market segment, but finished dosage is primarily based on doctor prescription, but OTC is more of a direct buying by the consumer. So direct buying by the consumer has gone up, and online buying has also gone up. So 60% API and 98% diagnostic devices. I would say these are the two headlines. If we now go specifically to the API division, as you all know that your company has been very focused and we do not have a long list of 50 products or 100 products. We work in very limited products which are high-value drugs, multi-stage synthesis, and with complex chemistry, so that some products have like 10 stages, some products have 24 stages. So we work in complex reactions where a lot of R&D and quality control measures are required. And most of the products what we operate is in lifestyle diseases, which are chronic diseases, which are consistently in demand. And of course, these are the high growth categories as per the data available. And all these categories are anti-diabetic and cholesterol reduction, hypertension, neuropsychiatric, and of course, our main product, loratadine, is anti-allergic. Montelukast is also anti-allergic, and even for the asthmatic also. So basically, the focus of the company is not to have a long list of products and doing a little bit of one product every time. So we do only high-value products with where some complex chemistry is involved. So we are good in chemistry. That's what our core competence is. And coming specifically to the export, API export has been very, very good. Like I shared that the total export of the company is 38%, but within API, last year, our export was 72%. So every, say, out of every 100 kgs or every $100, $72 come from is earned from the foreign exchange. So doing the foreign exchange earning, which balances our import payments also, even though we have some import from China, but since we have high export components, so our so-called balance of payment is very good. And in case there is an upside in the value of dollars to rupees, so we tend to gain. That's certainly 72% export business to highly regulated market, high value drugs, good chemistry, that had been our core. So 245 crore is export we have already done in the half year, and this is almost this is more than what we did in the whole year in FY18. And last year our total export was 341. Out of 341 crores, 245 is already achieved in this half year. So looks like this is going to be a buoyant year for the exports. And exports are not necessarily in one particular part of the world. So European market has gone up by 10%. APAC market, which is Asia Pacific, has gone up by 45%, which includes China, Bangladesh, Korea, Taiwan, Thailand. So that has gone up by 45%. And US market, in spite of all the lockdown, has gone up by 16%. And other miscellaneous markets have almost doubled. The numbers are small, but have almost doubled, 220%. So three times. So net exports have gone up by 37-38% from 92 crores to 127 crores in all the different continents of the world. Coming specifically to the IP parts, during the quarter we have filed 3 more patents. So we have now 125 patents filed, out of which 55 patents are active. We filed one more DMF in the US market. Now the number of DMFs has added to 111 DMFs. So China, we have registration which is called IDL, import drug licenses. So we find one more in China. So instead of 8, we got 9 now. And of course, almost 25 new products have been added to the product basket thanks to R&D. So R&D team have been very efficient in spite of the work from home and COVID and everything. Senior people are sitting at home and directing, and still the team had been working. We had all the little hassles here and there, but thankfully the results are very good. So 125 patents, 111 DMS, 9 IDLs, and of course 25 DMS, 25 new products, all to US, Europe, Japan, China, Australia. And I shared earlier that because of all these IPs, they have been approved by FDA, EDQM, TDM of Japan, KFTA, Korea, TG Australia, and of course EUGMP. So last time we shared with you that we have an extension plan at the same site, and there's a major extension happening after almost 22 years. The existing setup, the plant was basically set up in 98, 99. So now Government of India is supporting the API extension plans, and we also launched performance-linked incentive scheme. And of course, we badly need extension. We have a lot of pending orders, so we are also part of this Make in India campaign, which Government of India is supporting. And we thank Honorable Prime Minister that they are specifically focusing on the API because a lot of the countries' core is dependent on the import from China. So once we have a larger capacity, we will be able to reduce some dependency on China. So the project is 178 crores, which is going to take 3 years for completion. And of course, we may have new hirings to the extent of 700 people. New capacity to be added is around 2 tons with around 40 products. Some old products would also be consumed and will be enhanced, capacity will be enhanced, and some new products would be added. The total production value expected from the capacity is around 4,000 crores. So basically, whatever production capacity we have for the API, it's going to almost 3 times for the addition of the new facilities what we will add up. We already have a site and we already got a single window clearance from the Government of India, from Himachal Pradesh. So we are still waiting for the environmental clearance. The meetings have already happened. So soon your company is going to add this new flag to spread it. While we expand this market, so as I shared that this is a new expansion we are doing almost after 22 years, so it's a big milestone. So the existing market of the company's products, the main 4 or 5 products that we have, is around $4 billion. This is expected to go down to $2.8 billion in the next 3-4 years by 2025. But with the new basket adding up, so our new price will be $42 billion. So from $2.8 billion to $42 billion, rather 42 plus 2, it will be almost $45 billion. So the market is going up by 15 times. So we are expanding the market and expanding our reach, and of course we have to work hard to get all the products commercialized and do the sourcing part, do the R&D part. But $42 billion market is huge, and actually we are not expecting a major share. Our expectation is only 3, 4, 5% share of the market, and hope that whatever targets we have in mind, our team will be able to achieve profitably. Then coming to the main part, the second part, the diagnostic devices. Devices, as I shared with you, have been doing phenomenally well, and its turnover has almost doubled from 45 crores to 90 crores with a 98% growth. And year as a whole, it has done 137 crores, which is almost equivalent to full year sale of FY19. So FY20 was 168. From 168, it's already at 137 crores. It's almost 70-80% already done. So diagnostic business is doing very good. So within the devices business, glucometers are our main key product, and around 70% of the sales come from glucometers, and which has gone up by 74%. So glucometer sales are doing well. First quarter it was still not going strong, but the growth was only 40, 45, 50%. But this quarter, glucometers have gone up by 74%. PT meters have gone up by 185%, more than double. Thermometer sales have gone up by 311%. Again, I would say this may be a temporary thing because of this non-contact thermometers, IR thermometers. And nebulizers also have gone up by 43%. People have respiratory problems and all this COVID scenario pushing nebulizer sales also a lot. So glucometers, BP monitors, thermometers, nebulizers, then we have another product which are going 30-40% each. The glucometer, as I told, at around 71% share last year. And I'm happy to share that we have got 40 lakh installations of glucometers we have already installed in the market. And in the previous quarter, in this last quarter, Q2, we added around 4 lakh new meters in the market. Out of 40 lakh, 10% has been added in the last quarter. And we have sold more than 500 million strips. So 60 million strips are sold in the last quarter, in Q2FY21. So this quarter was very, I would say, eventful. The number of meters sold and number of strips sold was highest. The number of 60 million strips in one quarter, like 6 crore strips per been sold. Coming to the last segment of the standalone company, that's the finished dosages. As I shared with you, that it was badly affected by COVID. Last quarter was a bit disturbing, but this quarter it has come up. We are only 4% down as compared to the pre-COVID level last year. So from 35 crore, 34.77 to 33.43 crores. And year as a whole, it was 56 crores as compared to 137 crores. Year as a whole, we are still lagging, but quarter to quarter, show you guys. Then the last segment where we have done a lot of efforts in the COVID front is Dr. Morepen, where our OTC brand. So this has shown a very good types of traction. It has, the numbers have gone up by 53%, from 15 crores to 23 crores for a quarter. And year as a whole, last year was 64 crores. And 64 crores, 45 crores is already been done by Dr. Morepen in the half year. So Dr. Morepen also is showing very good results. And we discussed about the COVID thing in the last call. So I don't want to take your time now. Coming to the financial highlights, as I already discussed that the net revenue of the company has gone up by 57%, from 216 to 340 crores. Expenditures has gone up by 50%, from 198 crores to 304 crores. So basically there is 7% delta. Revenues were up by 57%, expenses were up by 50%. So there is 7% comes back to the bottom line. So EBITDA has almost doubled, 99%, from 18 crores to 35 crores. And if you look at the profit before tax, that is almost 3 times, from 9 crores to 27 crores, almost 200% jump, 198% jump. And last year, same quarter, there was some provisioning of the tax. MAT was reversed. So technically, that 9 crore profit became 4 crores. So profit after tax is from 4 crores to 27 crores. That's what goes to the final earnings, which is the EPS. So EPS has gone up from 9 paisa to 60 paisa for the quarter. That's broadly the financial highlights. We do have some balance sheet numbers which are more technical, but your equity capital of the company has remained same. Reserve surplus has jumped from 194 crores to 241 crores. And total shareholders funds have gone up from 284 crores to 331 crores. And return on equity has gone up from 11.8 to 14.1%. We do have some preference capital outstanding from the bank, 119 crores, which we propose to either pay cash or convert into equity, but we are proposing a cash settlement. Then, of course, there are no debt in the books of the company. All the debts have been cleared except this preference capital, which as per the new accounting standard is classified as a debt. But otherwise, there is no loan in the books of the company. All the loans have been cleared. So we rather have fixed deposits in the bank, and we sometimes avail overdraft facility against the FD. So there's nothing like a debt. We don't have a term loan, and we have a working capital loan. And we're proud to share that we are doing this 1,200 crore top line without even 1 rupee working capital from any bank. So profit before interest and tax has gone up from 41 to 47 crores, and return on capital has also gone up proportionately. That's broadly, I would say, the numbers, and I would request that in case anybody has any specific questions, please feel free to ask.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have our first question from the line of Ramesh Kalpekar, individual investor. Please go ahead.
Yes. Good morning. Good afternoon, Mr. Suri. Congratulations on an outstanding performance once again. I had spoken to you last time in the last presentation and made a few suggestions also about the expansion and things like that. I have a few things to say. The first one is about the bulk drugs. You have really given an outstanding performance on this front, but I think your website needs to be updated for the number of patents and the DMFs, which you have mentioned in your investor presentation. The numbers which appear in the website are old, and I would appreciate if you could give the details of those patents and the DMFs so that for a potential customer it helps who is abroad. The number two thing is in bulk drugs, you have said that you have an expansion plan of about 170 crore on. Could you break it up investment-wise and revenue-wise per year starting from maybe 21, 22 and onwards? So we had a fairly good idea as to whether, the investments made are generating revenue year-wise or they'll generate revenue only after the end of the third year. The second area which I would like to focus upon is the formulation business. Mr. Suri, I agree that the pandemic could have slowed down the sales, but many pharmaceutical companies have reported excellent figures even in formulations during this time. We established this division sometime in 1995, I believe, and over a period of 25 years, this division has contributed only 137 or 138 crores as of last year. Now, I wanted to ask you, you have said somewhere in your website that you have a US FDA manufacturing facility even for formulations. If this is true, then I do not know whether we have made any attempts to sell formulations to our API customers. These API customers in US and in Europe obviously have high-cost formulation manufacturing facilities. And maybe they would like to cut the cost and could effect a site transfer and, give us these products on principal-to-principal basis. Since you already have relationships in API with some of these maybe large manufacturers of atorvastatin and Montelukast and products like that, maybe you can manufacture these formulations here in India and then export it instead of exporting them the API. You can cover your overheads here. You can have a markup which can be very decent and maybe much better than the domestic formulation, so that at least the manufacturing of the formulation facility goes up, the overheads are absorbed, and you make better margin. The number two things which I would like to say about the formulation division is I believe we have some 100 branded formulations over 8 therapeutic groups. But obviously they have not been growing. Now this could be because of maybe your people need to be upgraded and they are not good enough, or maybe we are in the wrong product segments which are growing very slowly. In any case, I think I'm too small to suggest you any improvement there. But I think since over 25 years we have not grown, whereas other companies have done very well in formulation businesses, domestic formulations. I think this division needs a complete relook. in terms of field force, call averages, doctor list, and things like that. So my request is please have a look at this division. There is a lot of potential there, and I'm sure with the kind of products, some of them are almost OTC products, this division could do very well. The third is about the diagnostic and the OTC division. I wanted to know, sir, whether where we are using our pregnancy test, whether it is in diagnostic division or it is in OTC division, I don't know, or whether you have a common field force for both these, that also I don't know. So if you could enlighten us on this, we'll be grateful. The reason why I'm suggesting the pregnancy test kits, as well as I would like to know whether you would like to go into condoms, because that's also an OTC kind of a thing, and they are distribution based. So if you have pregnancy kits and if you are able to sell pregnancy kits, you should be also able to sell condoms. And with COVID times, people sitting at home, I think these two things will get a lot of demand, along with your COVID other kits. The field force size is very important here, and whether there is a common field force size in diagnostic and OTC, I would not know. So kindly enlighten on that. The last thing is, I just checked about your oximeter price, which is about 1,500 on Amazon and Flipkart. And India being a very price sensitive kind of a segment, oximeters are available for something like 600-700 rupees. So I do not know, probably our goods are out of stock. That's what the Amazon site said. But I do not know whether it's a choice that you have priced it higher. I must thank you for the great performance. One last question on financial. There is no tax provision. So is it going to be made at the year end, or we have some accumulated depreciation, maybe tax losses, which we can set off against the current profits? That's all, sir. Thank you very much.
Wow, thankfully you said that's all. There's 7 questions. Dinesh, first of all, I must thank you that at least you are taking a care to understand and get into the details of each and everything, which is very appreciable. In today's world, people don't have time to even study the standard things and the standard reports, but you have done a good insight analysis. So coming specifically to the points that for the patents and DMFs and like you said, the website, our website is getting rejuvenated and most of it has been approved, but I think it is still with some legal guys and IT guys who are still playing the games, and it may take another 4 to 6 weeks time. I think by the time we meet for the next results, so the new website will be up. And like you said, what are the details of the patents? Because whatever patents are there, these are all public. So, but most of the things are very hyper technical. Nobody understands, but only R&D guys understand. But we still have it on the website. But you're right, we'll update it. And the new design of the website is more informative, more interactive. But our latest observation was that not many people are visiting websites. So more and more people are interacting on social media. I don't know whether you're tracking Dr. Morepen on social media. Just check Dr. Morepen. There are multiple handles on Instagram. And there is a regular updation on Dr. Morepen. Then there is a person giving section on job, Dr. Morepen Health. So more and more people are visiting social media sites. But yes, for international customers, they look at the website. So suggestion well taken, and this COVID was one reason which delayed all the things. But now if you're finalizing the website on the Zoom calls only, it's already approved by the teams. Now it is between IT and Vision guys. They should come up now. Your second question, which is appreciated and which is very, I would say, my suggestion, that expansion plan is just even from a cost of project point of view. Certainly, it is important to start from the cost perspective, because what are the financial arrangement, where is the money coming from? So, but certainly all projects are done based on breakup, how much land, how much revenue, how much building, how much machinery, what is the cost part. Second is the year-wise revenue. But year-wise revenue stream is based on basically when I say 2 points. One, of course, is simple projection purpose and capacity utilization purpose, which is submitted to the authorities for purpose of calculation. But what we have done is that we have done our sales plan based on the marketing team, that what marketing team is doing, what customers are buying, and which customer is going to buy what for next 3 years' time. So there's basically line by line, item by item, customer by customer. We make 3-year budget, and then of course next 2 years is a forecast. So naturally for those things we need enhanced capacity. So that is what the capacity will be set up, and then that those are being set up. Now whether all things will come together, whether things will start only in the third year, your guess is very right. Naturally, we are not going to wait for everything to start simultaneously. Depending on the demand and supply, depending upon the market needs, whatever will be required, that will come up fast. And certainly, we are not even waiting for the new project to come up. So even if we have to do some investments in the existing site, we keep on doing. And customer is important, demand is important, because if you lose a customer, it's very difficult to get back. So I would say that we have line by line item for each and every year, but we are not specifically defining that okay, this thing will come from the old plant, this thing will come from new plant. This is my target for next 5 years and 10 years. We already have plans, and all those plans are being met by the increased capacity, including the increased capacity and of course the existing capacity. But yes, the ROI perspective, certainly we will try to match year-wise our growth also. But first 1 year, I would say, would be practically very slow because it's more of a building phase and construction phase, and because new blocks have to come up. And by the time our production blocks are ready and machines start reaching the sites, so that is the time we'll set its speed. Certainly, we will keep you in the loop. And the third point is very interesting, the finished dosage. And we have this a lot of internal debate that all pharma companies are doing good and why not our team. But we are not, we are openly sharing that our team is not very big. We are a very small team of around 140, 150 people as compared to some 4,000, 5,000 people. Big team in large companies. So we have a very small team. And our focus area had been always on the API. But now since we have the new pipeline of APIs about all new molecules, so we have plans to expand our cardiac division. The cardiac division is in cardiac and diabetic. We have appointed a new senior guy who is from the industry, not me, but and certainly the focus will be more on cardiac and diabetes, which are the chronic and lifestyle diseases. And we have a strong pipeline of all the gliptin and glucosamine, which are new molecules. And as a strategy, we do not want to be a part of the mill, and we don't like to repeat the generic things. So we always want to do something exclusive. So now we have a strong pipeline. So we will certainly go to the market with that. But as far as this international suggestions are concerned, the point well taken, but we do not have the US or CO facilities for finished dosage. In case you find it on the website, maybe it is normally written or not updated. Finished dosage plant, we use US FDA facilities of international partners. In Best Laboratories, we have a DMF and an ANDA. Our international many partners, they manufacture in the US. And we do not have a US FDA approved facility, but that is an agenda, maybe not immediate agenda. This expansion what we are doing now, that is only for the API. But once we are done with the API, we do have a surplus parcel of lands, so we may go for finished dosage product also, and have a facility up to the international standard by which we can add on the finished dosage also. But for the time being, we are expanding only in the API part. Coming to our next point, the therapeutic categories and formulation business, what categories. So you rightly guessed that having so many divisions and so many products is not heading up. So now the focus is only on the cardiac, which is cardiac and diabetic. Cardiac is the name of the division, cardiac and diabetic, which is, and of course, a little bit of immunopsychiatric, which is matching with our own API. So we have all the new APIs, and all those new APIs are going to add to the finished dosage business also. But yes, it's going to take some more time, and our focus has been to be focus on the core competence. And as we already discussed, that company had been so so far focusing on repayment of the banks and settlement of the old debts and liabilities, and we do not have any working capital. So we were focusing, okay, where do I get better returns? So finished dosage business and to an extent OTC business also, it needs some upfront investment. So as a company, we were targeting that, okay, we should not overspend and spend on the things which are low yielding as of today. But now we have surplus cash flows and formulation business is also coming picture. But yes, it is not our, I'd say, core competence. The fifth question is on diagnostic devices, OTC and pregnancy tests. And pregnancy test, presently we are marketing under OTC, under brand Quick Check. And it's growing very rapidly. And like you said, that maybe all teams can sell and maybe what teams sell. But diagnostic devices business is a team who have R&D, and they have developed some new test which is more effective and more accurate. But just to share with you, the market of this product, pregnancy test, is very competitive, and there is a cutthroat competition in the market. There are no margins. So either we create a brand like one of our pharma company, Mankind, they spend a lot of money and create a brand and spend money on that. Otherwise, it's a very competitive category. So we will see at a prepared time that do we want to spend money behind the brand, and only Dr. Morepen has one brand, or Quick Check has another brand, or Mamol has another brand. So, but yes, it is in our radar. But as of today, the market is very competitive. And referring specifically to your collected question about the condom, we studied this product and many times. But again, this is again a competitive market. Plus, the market has got, I say, 2 or 3 high-end players. And to break the monopoly of these higher players, again, you have to spend tons of money. Rather, there was an opportunity to buy a company also, a nice good company, the boutique company which was up for sale for the condoms. But our marketing team was not excited about it because it's a very price sensitive market. But yes, in case we get a good tie-up with some international brand, we are open to do that. But primarily, Dr. Morepen as a brand is more on health and devices, only on devices. So, and of course, to answer your question, whether field force is together or separate, our field force is separate for all divisions. Diagnostic is separate, devices is separate, finished dosage is separate. Within finished dosage, every division has got separate field force. And your next question was on the oximeter price. So you guessed it right that either we are out of stock, that is why our price is higher. So oximeter is in great demand, and we are short supplied. We are shortly supplied, and even for our routine, if somebody asks for a sample or if somebody wants an office, we have to wait for a few days, few weeks. One, of course, is transportation and COVID issue. But in general, we are not able to cope up with the production because the basic, some of the ingredients, some of the raw material is still coming from China. And there are restrictions. But yes, last year, because the sale was almost negligible, just few thousand pieces. So now we need 30,000 pieces every month. So we are breaking up the production. And there were limitations on the increase in the production also. We are not adding too many people because of COVID. Now we had developed a process that we hire a person, does a COVID test, and quarantine for 2 weeks, and then we have started the new hiring. And your last question was on the tax provision. And certainly, tax provision is not at the end of the year, it is done on a quarterly basis. But last year, we availed the scheme which the government had suggested that in case you provide for MAT, your tax rate would be, say, I think it was 25% plus. And if we surrender the MAT, so our tax rate will come down to 22%. So we surrendered the MAT and our tax rate has come down. We do have some carry forward losses. So maybe not this fiscal, but next year onward, we'll have the provision for the tax rate. So whatever profit we are enjoying now, maybe next year it will come down a little because of the taxation. But let's see, the team has to work a little more harder to give you the same number or the same year. That's broadly. I hope I did not miss miss anything, Suresh?
No, you have done great, sir. Only a request. If a shareholder wants to give you any suggestions or give some feedback, is it possible to give any email ID or a communication number where we can communicate?
Of course, there are numbers of our corporate and company secretary and others, but you're right that there can be a separate email ID for suggestions. So,
yeah, because there could be people from the industry who could be your shareholders and share it.
I can do that. I can understand that. Suggestions from any side are welcome, and I'll see if it can be separate corner for that. But certainly there are multiple mail IDs for various things. But now we are trying to improve that so-called contact page also, because too many different things. Sometimes consumers, sometimes customers, sometimes customer complaints, sometimes shareholders, sometimes some vendors. So we're trying to keep life simple, so that there's a separate email ID for everyone.
Okay.
Thank you, Anishu. Thank you for spending time in studying your company.
No, it's a great company. I'm sure it will go great heights.
Lovely. Thank you very much.
Yeah. Thank you. The next question is from the line of Subhruta Sarkar from Morepen Finance. Please go ahead.
Hello.
Yes, please.
Yes. Sir, just a few questions from my side. One is on the balance sheet question. Sir, why our receivables are so high? So this is one point, sir, I'm just trying to understand. If you can throw some highlights on that. And second thing is, sir, we are only into 4 molecules. So if you can share how dominant player we are into, or mainly into those 4 molecules, and what is our future plan? We only want to concentrate on 4 molecules in terms of size, or these 4 will only remain significant, or there are few more molecules which can become significant maybe within next 1 year, 2 years time period.
Good. So Subhruta, coming to your first question on the balance sheet perspective. So the receivables of the company are well within the limit, which is the industry limit between 55 to 60 days, and sometimes going up to 90 days. But this quarter, particularly 30 September, the receivables are high because we had huge sales in the month of September, in the month of, I would say, August, September, and since most of the sales happen at the month end. So the month end numbers sometimes are missing. But when you look at the average average debtors holding, it is within the number of days, and rather it has reduced as compared to the previous thing. Because in March, the top line was low. So technically the number was looking lower. The number was looking higher. But now we have seen that on an average basis, our debtors are improving, which is better. But as far as the number of, the monthly sales will go up, there will certainly be an upside in the number. And in diagnostic division, we do not have any credit. We sell in advance payment. It's in API, of course, domestic pharma companies work no one gives advance. And export also certainly needs 60 to 90 days for the payments to be clear. But we are within the limit. Coming to the question of new molecules, so you have a very direct question, a very intelligent question that these are 4 molecules which are contributing, but these 4 molecules are what we have been able to generate and create over a period of time. It has taken us 20, 30 years to reach to a level that we are happily saying that we have a 600 crores top line or 700 crore target with these 3-4 molecules which are contributing. But to answer your question that are these the only ones which will remain? The answer is no. These molecules will slowly decline and their share will go down from presently 90% to maybe 40%. So we have another pipeline of almost 20 products in a similar category: anti-allergic, anti-asthmatic, cholesterol, and then hypertensive. So all these drugs will come up, and we are actually looking for more and more blockbusters in the coming years. And we are launching these products one by one. And as we go along, so every single product is now having a good market share. For example, Loratadine has got a market share of 59% out of India export. And whatever export is happening, 59% of the goods go from us. In Montelukast, 37% of the goods are Morepen goods which are exported out of India. At Atorvastatin, we are still in the competitive stage and we have Morepen share is 10%. Rosuvastatin, our share is 8%. So we are gradually gaining up shares in Atorvastatin and Rosuvastatin. Someday we will reach here also. But other than that, we have a long list of products which are expiring in the next 5 to 10 years. For example, we have Rivaroxapan, Vildagliptin, Sitagliptin, Vidagliptin, Sapagliptin, Dapagliflozin, Empagliflozin. These are the products which are expiring in the coming years. So we have, I would say, item by item list with us at what product expires when. But of course, those are all futuristic things. So we are coming to you with the results which are actually happened. So just be comfortable that more and more products we are adding every time, and our dependence on these products will certainly reduce. But the good point is that, for example, products like Loratadine. So we were having almost 90% market share back in '98 when we started supplying. And I'm proud to share with you that in the last 22 years, we have not allowed anybody to break that monopoly. We are still number one. So that is our strategy, that whatever we do, we are number one. We don't want to be a part of the crowd. Montelukast, we are the largest one in the world in terms of capacity. And whosoever wants a good quality Montelukast, they will get it from us. So similarly, we are having a similar strategy for Atorvastatin and Rosuvastatin. And other new molecules, as and when they will keep on adding up, so they will also go for the blockbuster category.
Okay. Sir, so just a follow-up question, like since we are already into this two statin molecules, so statin is a very big product without any doubt, sir. So two-point question, a very specific question. What are our strategy on these two statin, and are we considering other class of statins also to produce? And same question about gliptin, since gliptin is now second generation. A very promising molecule. So what are our strategy on entire gliptin family, sir?
Okay. Basically, I would say our main focus is in diabetics. So in diabetics, these are gliptin. Yeah, like I told that we have Sitagliptin, Linagliptin, Saxagliptin, Vildagliptin, Alogliptin. So these are the 5-6 gliptins we have. Then the second category we are going with gliflozins. In gliflozin, we have Dapagliflozin, Empagliflozin, Orthogliflozin. And in case of cardiac, we have these anticoagulant products, Apixaban, Edoxaban, Rivaroxaban. So this is a new third category. And then, of course, we have products in the neuropsychiatric. Basically, the whole point is, like I shared, that lifestyle chronic diseases. And of course, the number of products, number of diseases will keep on changing. Aaj kuch hai, kal kuch aur hoga. So sometimes product works, sometimes it doesn't work, sometimes there are some other issues. So we keep tracking, and we have a full-fledged department who does a pre-launch study, what are the products in clinical trial, what is happening in the post-launch period, and what happens to, for example, market situation. So we track the EU data of almost top 500 products, and we always say that within top 100 products, we should always be in the game. Out of 100 products, even when 10 products click, they are home.
Okay, sir. Okay.
Thank you, Subhratji.
Thank you, sir.
Thank you. The next question is from the line of Tushar Sarda from Athena Investment. Please go ahead.
Yeah, thank you. Thank you for the opportunity and congratulations for a good set of results. I wanted to understand a little more about your diagnostic business. What is your long-term outlook on this business? How fast can it grow and how much will it grow? Second is, how much do you sell online and how much offline? And third, since your focus is on glucometer, would this strip sales be recurring, and what are the margins on this strip sale? So these are the three questions I have. Thank you.
Good. Just to quickly reply you, the diagnostic business is an evolving business and it's a new age business. And when we started naming this business, we called it new generation healthcare because people in the earlier time were dependent more and more on the doctor and self-testing was not in the game. But slowly we introduced this concept of self-testing. And now more and more people are happy to do their self-testing at home. And we are as a company, we are leaders in creating a brand for home diagnostics. Home Health is our name of the brand. And most of other partner companies like Ramesh had asked question earlier are focusing on finished dosages. And everybody was focusing on the doctor's chamber. We decided to focus outside the doctor's chamber and actually talk to the consumer and make a brand for ourselves. So it's a very fast-growing category. And this business has been growing at a compounded annual growth rate of CAGR of almost 34% year-over-year. And particularly specifically talking that how fast it is growing, I would say it's growing very fast. But let's see the numbers because India is the diabetic capital of the world and there are almost 70 crore diabetic expected in I think 2050 or something. But we are saying that even the addressable market, leaving aside the villages and poor people and everything else, so we are only 40 lakhs. We just 40 lakh customers, 40 lakh meters were sold. So even if we discount the market by 70-80%, target 10 crore diabetic population by next 20 years. So we are at only 40 lakhs. So miles to go and huge, I would say, work to be done by the team. And specifically coming that this is a strip sale recurring, the answer is yes. It's like a typical printer cartridge model. You buy a printer and then you buy the cartridges for lifetime. So similarly, here you sell a good quality meter. And then of course we have to keep supplying them the strip because without strip the meter is of no use. So some companies have priced their meter high, some companies price their strips high, but we keep both things affordable. And certainly we had a good margin because we have our own production. So we are producing it on our own and it is in-house production. So we have some good margins here.
Okay. And how much is online and offline of this in this? How much is sold
online? We do have, I would say, a lot of noise on online. If you just Google Dr. Morepen, all you'll see is our BP monitor and glucometer. But sale of online is not more than 5%. We still have major distribution. 95% is offline only. Because we do not
sell all cash and carry.
Yeah, it's almost cash and carry because we sell in advance payment and some of our distributors they put it online. So we do not count. We have some distributors in Bombay who do only online business. So they may be selling, but as a company we do not compete with our distributors.
And what is the margin for diagnostic business as a whole? Do you disclose that separately?
No, we do not disclose, but I would say it is in line with the overall EBITDA margin, rather it is little better.
Okay. And any plan to introduce more products or you are happy focusing on glucometer for now?
Look, I would say the glucometer is a cash cow which is a running business, but certainly we are adding more and more products and the whole idea is to do the complete backward integration of BP meter, glucometer which are actually diabetic and cardio. But then naturally we have weighing scales, we have thermometers and we have heating pads and then stethoscopes. But we always have to see that, okay, what makes better also return on capital employed and where do we think that there is a demand. So, for example, a simple product like stethoscope, just for 100 rupees, 150 rupees stethoscope, there is no technology involved and there is no much innovation involved and there are small scale players available in the market. So we don't focus on those products. We try to focus on the product where there is a technology involved or a chemistry involved and it is difficult to produce. So we could see that glucometer is one. And certainly nebulizers is another, that's more of a mechanical thing. But yes, that's needed. Most of the things are only imported, primarily from China. So as we keep on reducing our dependence on China, more and more things will come to India and we see a lot of opportunities here. But going forward, there is a good scope for Bluetooth devices, connected devices, data management, and attachment to your app and software. So those are the things which you will see at a later date. But certainly we have to see that we should reach at a good volume price and we should have a critical mass first.
And last question, sir. Do you manufacture this yourself or do you import them?
Yes, we manufacture. We have a plant and we manufacture it in Baddi.
Okay. Thank you. Thank you so much. And all the best. Thank you so much.
So nice. Thank you very much.
Thank you. The next question is from the line of Rajesh Malapuri, individual investor. Please go ahead.
Yes, thank you. Good afternoon, Suri sir.
Sorry to interrupt, sir. Rajesh, there's some airy noise coming through.
Okay. Is it better now?
Yeah, much better. Please go ahead.
Yeah. The way you are performing quarter on quarter and year on year, being an individual investor, I'm happy about it. But there are a few concerns being an individual investor into your company. The first one is recently you have taken a preferential share by investing around 421 crores. So in what way these funds will be utilized? That is question number one. And number two, in last AGM notice, I have seen that the promoter's salary is getting increased from 2 crores to around 10 or 20. I exactly don't remember the exact figure, but it is going around 5 to 10 times from the previous salaries. And the third one is regarding R&D expenses. So I could see an AGM notice that you are spending around 1 to 2 crores on R&D. Will it be sufficient for you to grow in next upcoming years with that R&D expenses for the company to grow eventually? And the last one is the thing is related to the FD shareholders. So because of that, there are many shareholders who don't have much trust on this company. So do you have any plans to regain the confidence from shareholders to invest into your company? Because I don't see much of the mutual funds or FIAs or individuals investing more into your company. Can you give us some details around it, please?
Lovely. Thank you, Rajesh. Thank you for all these very polite questions, but these are very important for all the shareholders to understand. So through you, we would like to communicate. So like I said, that quarter to quarter, year-on-year performances have been good, and thank you very much for appreciating that. So coming specifically to the warrants which has been allotted to the promoters, and it was there in the annual general meeting. So 420 crore is the amount of money which will be received over the period of next 18 months. So as a part of the notice, it was shown, and we talked in the EGM also, that the money will be utilized primarily for the new capex which is coming up for the expansion, and of course the growing need for the working capital. As the turnover goes up, so our investments in the inventories or investment in the debtor, that also goes up, and to an extent expenses also go up. So third, of course, is that we have some outstanding preference capital of the banks which need to be settled. Depending on how the banks want, they want to settle it or they want to convert to the equity. So the cash flow will be utilized for all these three activities. And immediately in the current financial year, as we talk today, and within this, on the subscription of warrants, 25% money is required to be given by the promoter upfront, and balance money will flow within 18 months of time. So as and when the project requirement is there, the balance money will keep coming and will be scheduled, will be matched, so the production is not delayed. Product is not delayed. Coming specifically to your question on the salaries and remuneration of the promoters and directors. So basically these are done on a rotational basis, but we actually do not draw salaries and those things on promoters till the time there is sufficient profit. There are certain norms as provided by the Companies Act. So those are done within the norms only. And I'm happy to share that last almost 25 years the company has been struggling, and we were busy paying the banks and other things, and we did not withdraw salary for, I would say, almost 10-15 years. So now since the company is coming up and back on track, so we are trying to put it according to the market condition. But these are all standard resolutions which are passed. But an actual payments are made only when there is sufficient profits. But the next question is very interesting, that R&D expenses. So the nominal expenses that we are doing, is it enough for the company to grow? So I would say here the R&D expenses that we see in the books of accounts separately dedicated are only the expenses which are dedicated only for a particular lab or a particular thing which is separate, but we try to expense out the R&D expenses. Some companies will try to capitalize the R&D thing and try to maybe we can answer the profit. So, but we are a little conservative and we try to expense out whatever is done, and we do not try to highlight and maybe capitalize the asset. But yes, you're right. Going forward, we have to increase more and more on the R&D, and the revenue expenditure certainly will go up. And as we are adding more and more APIs and new molecules, so our R&D expenses certainly go up. Your last question is on the FD. I think that was a long pending thing, and we discussed in our last call also. So thankfully that has been acknowledged, and that was more of a statutory thing. So just to recap that NCLAT Chandigarh and NCLAT Delhi. So they had directed that all the shareholders who were allotted, all the active holders who were allotted shares should be returned, but their shares should be cancelled, which was not legal and logical to cancel the share. If somebody is already having a share, he can't just cancel the share. So we requested everybody to come back and report to the company and give us their bank account and the details of the portfolio and the proof of holding, etc. So unfortunately, not many people replied. Last year, we had received only some 225,000 shares as of 31st March. So we were in a fix that how do we go about it. So then we took advice from retired Supreme Court judge, and they advised that instead of waiting indefinitely, we should give a final notice, because we cannot cancel the share till the person is known and given notice to. So we gave a final notice, and thankfully, because of COVID, maybe people were home, we got a good response, and around the 50 lakh shares have been surrendered to the company for cancellation, for which we have already made a provision, and we have started paying them. And now in our books, that problem is once and for all sorted. And those people who have already registered and surrendered their shares, they are being paid. Rather, in our profit and loss account, if you look at the notes of account at the bottom of the P&L, so some 13 crore rupees has been provided as a loss which company is incurring because of interest and whatever waivers was given at that time. So we are paying interest from the year 2003 to 2020, like 18 years of interest we are paying as per the court order. But whatever the law provides, we are doing that, and we have got around 50 lakh shares which will be surrendered, and maybe in 31st December or maybe by 31st March, we will file it to NCLAT to SEBI and other stock exchanges for cancellation of those shares. And once those shares are cancelled, so EPS of your company will also go up. And of course, in case there are any active holders who still have anything pending, so even though we have closed those dates, the last date is already over, but in case there is anyone left over, we will always honor it.
Okay. And one last question. Will be there any buyback offer from the company side?
Buyback offer?
Buyback offer from individual shareholders. Like many companies do buyback offer.
Yes, many companies are doing. We all want to do it, but as of today, our priority is to invest in the business, which is, I would say, very good situation, and market demand is very good. And we would appreciate that if we have a little more patience in the business, and once we have certainly surplus cash flow, so it's always efficient idea to reduce the capital, because capital is not doing anything good. But our capital is already churning out very good results. So I would say we prefer to focus on the business for the time being. But yes, at a appropriate time, in case there is plan to buy back the equity, we will certainly come back to it.
Okay. Thanks so much, Surya.
Thank you, Rajesh. Thank you very much.
Thank you. The next question is from the line of Sachin Kasera from Swan Investments. Please go ahead.
Good afternoon, sir. I had 2-3 questions. One, what is the update on the preference share?
if you could tell us, which are worth 119 crores, which are pending, are we in negotiations with the banks to redeem them, or they will be converted? If you could give us some light on that, that would be very helpful.
Any other question or any other question?
I have, but I'll take them one by one. Yeah.
Total proposed capital of the banks is 119 crores, as we said that, and around 58% of the banks, so maybe 58 to 60% of the banks have agreed to convert into equity, and rest of the banks are still undecided. And depending on the price of the equity, whether they want to go for conversion, or want to go for settlement. So once we are through with all the 100% of the banks, most likely they will go for settlement. Banks usually do not prefer equity. So, but depending on the price, if they are happy that okay, the price is good and they have better earnings, so they may go for equity. But as of today, as a company, we would prefer to settle. But there is no ready answer with me. It will depend how banks want to go about it. But we would like to pay them settlement one time.
You're saying 60%? Sorry, sir. You are saying 60% of them right now should interest to convert into equity, as that is the status.
This was as on March. After COVID, there hasn't been much interaction because at that time there was no plan for this promoter equity coming up. Now the money is coming up, we'll prefer to pay them.
And what price the conversion will happen if it happens, sir?
That has the SEBI formula. As simply average or last 2 weeks SEBI formula. 26 weeks average or 2 weeks, last 2 weeks, whichever is higher.
Sure. And do you need, is it like everybody has an option? For example, some people can opt for redemption and some for conversion, or whatever is decided by the majority, that will be applicable to all the
majority. Because earlier these were done through CDR, so it was through a majority. So now again it will come through majority. But if somebody has a smaller amount and he wants to settle one part of the CDR, so but he also has to wait. Normally it is done majority.
And when you say majority,
majority is 75% of present and voting.
In terms of number or in terms of value, sir?
In terms of value. So for example, 60% is present, is already there, and if the other guys do not come up, for example, foreign banks do not come in that meeting, so anyway we can get a majority. But because of COVID, there haven't been any meetings and all those things, so we will see, and of course bank have been busy doing their own things. So maybe after the close of this quarter, maybe in January, February, we'll discuss with them, and once we have the capital in hand, we'll prefer to pay them.
Sure. And you said one of the intention of doing this preferential to promote is to repay the preference shares. You could also utilize the funds from preferential allotment for repaying the preference capital.
Yeah, earlier because technically we were not having the so-called dividendable profit. So preference capital can be redeemed only if you have sufficient profits. So now company is earning sufficient profit. So technically company can redeem the capital, but we have to see that we don't want to be devoid of working capital. So we have to strike a balance so that we don't want to compromise in the growth because shareholders have been waiting for so long for the growth. Mm-hmm. So once we get a good growth on the business level and we still have surplus, we like to pay that back. Settlement.
Sure. So second question was on the EBITDA margin. If I see our EBITDA margins are currently close to 13-14%, even adjust for the 12 crores of one-off charge that you have taken, which is a little lower than most of the other API companies which report margins, which are reporting margins excess of 20%. Is it because we have a lower exposure to the regulated markets and once that changes, margins will go up? Or is it because we know our products, because our old products, the margin is low? If you could just help on that, that is really helpful.
Yes, I think you guessed it right. Basically, as a pure API company, we have good margins and the margins are certainly improving. And certainly there is a critical mass also and volume also, which is good now. But the companies who have perhaps higher margin, or I don't know which company you're comparing to, so they have a lot of exposed finished dosages, which is by finding ANDAs and finished dosages and which are very high margin. And even the domestic formulations also are very high margins. So that within the API segment, we are in the range, and certainly the things are improving. And as we go forward, things certainly will be more and more better.
What is your sense from a medium-term perspective on the EBITDA margin? How do you see them, as you mentioned that you're developing a lot of new products? So what do you see as the trajectory or a broadly range between say 2 to 3 years from now?
I would say difficult to give a number, but from present EBITDA margins will certainly be up by 3 to 4%, maybe up to 15%.
Sure. And second question, I see your annual report and I see your subsidiary Dr. Morepen, around 65 crores of turnover, this hardly makes some small profit of 60-70 lakhs. So can you tell us what exactly is the strategy there and how do you plan to improve the profitability of that business?
As I shared earlier, this OTC business is primarily advertisement driven, and as a company, we were conservative that we were not spending too much on advertisement and we were not having cash flow surplus. And without that, we just launched few products so that the products should be there in the market and we should get some good traction. And now this quarter, it has started going up, and the top line is better, and the EBITDA margins are better. So once we have a good volume, it's basically a volume game. We have to have a critical mass. Even if we want to give advertisement, so we should have a reach in the market. We should have sufficient volume even to advertise. So maybe I think we have to wait for 2-3 quarters by the time we get good numbers and we can afford a better advertising. And as I shared earlier, the advertising media are also changing. It's switching from print to TV now to social media. So they find cheaper ways to advertise in a more efficient way. I won't say cheaper, but more efficient ways to advertise. So, but otherwise, Bernal as a brand is doing very good, and Dr. Morepen as a brand is standing tall. Dr. Morepen brand has diagnostic devices also. We have launched many products in the COVID. We have all the sanitizers and masks, and then Chyawanprash, then we launched Bernal as brand extension into disinfectant, Bernal soap. Then we had curcumin tablets, vitamin C tablets. Basically, all these things are now helping because the product portfolio that Dr. Morepen originally carried was only Bernal and tablets. So Bernal as a category is not increasing, it's not growing very fast. Bern as a category. So now we are trying to do brand extensions of Bernal into other categories, and it is expanding very fast. And plus, now one was COVID, and second is that COVID has given new category, immunity vitamins. Earlier people were not serious about taking vitamins. Now everybody is taking vitamin C and vitamin zinc plus other multiple vitamins. So we have multiple range of vitamins. So there's a good plan for Dr. Morepen. But you're right, at when do we start making money? When we get a critical mass. And we are already doing that in this quarter. I'm happy to share that.
Sure. Just one last question on this preferential allotment of the promoters. So from what I understand, there's some cap by the SEBI, and in our case, I think the equity is going to increase by some 25-30%. So how do we cross the regulatory hurdle of that SEBI cap of how much a promoter can increase via preferential? Or is there some relaxation? I think that has come in pandemic. If you could just...
Yes, Sachin, you're right that SEBI has a cap that in 1 year we cannot increase, we can increase only up to 10%. And next, basically, normally it is 5%, this year it is 10%, and next year it will be again. So now within a period of 18 months, we may have to switch to 2 financial years to get to the restoration of the ban. So it will be done within that cap only without triggering that takeover code.
Sure. And if you could just don't mind, sir, we are the promoters are including a very large amount of capital, close to around 400 crores plus at full conversion. So, and since you are on the call, if you could give us some insight, what is the source of funding for the promoter? Because it seems like a very, very large sum. And you mentioned that the promoters have not even taken salary when the company was going through the bad times, forget dividends. So, that would be really helpful to know what is the source of money, which is a very large sum, 400 crores for a small company like ours.
Currently, we are arranging for some promoter funding, which is going to help us ease it out. And that's why we needed some time also. So we have 25% subscription now, and we have some time, and we are naturally tied up with promoter funding.
Okay. Thank you. All the best.
Thank you, Sachin. Thank you very much.
Thank you. The next question is from the line of Prashant Parda, Athena Investment. Please go ahead.
Yeah. Just a follow-up on my previous question. Who are your main competitors for this glucometer, sir?
We are number one. But I would say that we operate in the market. Certainly, the only two multinationals are there. Roche is the one who is there in the glucose business, and Omron is there in the BP molecule. Roche has a product called Glucose One. They have a product AccuCheck. So we have Glucose One.
And what would be your market share?
There's no official data available, but from the data what we see from their input, so their numbers are receding and certainly we are gaining market share. So maybe we are 55, they are 45, maybe sometimes we are 60%, they are 40%. But certainly they are older than us since so many years. They are in the country since last 100 years. So their installed base is more, and our base certainly is adding up. So we are the fastest growing, but they may be still larger than us in terms of actual installations since last so many years.
Okay. Thank you, sir.
Thank you, Prashant. Thank you.
Thank you. The next question is from the line of Pramod Kumar Agarwal, individual investor. Could please go ahead.
Bhagwan, I'm individual investor. Sir, I want to congratulate for
Pramod, your voice is breaking up in between.
1 minute. Hello. Now you are getting the voice? Hello.
Yes.
Yeah. Sir, I want to know whether when we can get the dividend from the company.
Well, thank you very much. And now, as far as dividend is concerned, there are certain norms which SEBI and Stock Exchange have provided as to the company act also.
Yeah.
At what stage we can give dividend. Maybe not this year. Maybe in the coming 1 or 2 years, we'll have some good news. And whenever any dividend is declared, certainly we'll come back to you. Rather, will be approved by the shareholders only. Depending on the distributable profit, so we'll certainly come back to you.
Okay. Thank you, sir.
We'll take something. Pleasure. Thank you.
Thank you. The next question is from the line of Ramesh Kasbekar, individual investor. Please go ahead.
Yeah, Sudhi Saab, this is a follow-up thing. You said you have separate field force divisions for diagnostic, OTC, and branded formulation. I don't know whether it will make sense to combine the diagnostic and OTC divisions because they're mainly retail and distribution based kind of products which are handled. Even formulations, they can have a reach where they do this retail chemist prescription audits and visit lot many distributors, stockists, and retailers. So, because I'm suggesting this because you have only a very small division of 140 people you said in formulations, which is really inadequate, And if you are going for cardiac and diabetic products in formulation division, these are highly specialized. Many of the big pharmaceutical companies have a kind of monopoly, and I believe being in pharmaceuticals, you know what kind of practices go on in cardiac and diabetic products. Unless, you are going for low-end products, which are now taken up by general practitioners. There are companies which cater to the GP segment in cardiac and diabetic, which are very low-end and where, in fact, like atorvastatin and most of the first generation bulk drugs in cardiac and diabetic. So that really needs a very deep thinking, because I believe if you want to expand the OTC and diagnostic division, then you have to have a very large penetration in the market with chemists and with various stockist organizations. So having separate, I do not know whether they will be able to achieve that kind of penetration. So just your views on this, please.
Yes, Kamechi, as we talked earlier that we have separate team, and certainly the separate team objective was to focus that in case there are separate distributors, because in the market when you talk of distributor and stockists, there are separate distributors. There are some guys who do stock diagnostic, they do not do finished dosages, and people who do formulation, they do not do so-called OTC. So basically, the market has got segmentation. If market is segmented, so we can't have a same team because we want to have close relationship with the team, with the distributor, and of course with the end customer. So the pharma guy, the formulation guy, must be there. Their focus is in the doctors. So they visit the chemist I say not very regularly, but their focus is in the doctors. Then for the OTC guy, their focus is in the chemist and sometimes retail and maybe sometimes pharma shop. The OTC guys visit everywhere. But diagnostic devices usually in every market, only A category guys keep the diagnostic devices. A छोटा chemist जो है वो diagnostic devices नहीं रखता because of the value. And they have single order quality for every diagnostic will be say 5,000, 10,000 rupees. So that smaller chemists don't keep that. So basically the number of retailers and number of distributors who keep diagnostic devices is different than finished doses and than the OTC. But you're right. So at some stage when we have critical mass, maybe not yet, so we will see when certain value at this. And particularly your point that competition is very high in the cardiac and diabetic segment, and the big guys do not allow entry of small new companies. So naturally, we find a niche for ourselves. We do not go to SECA market, or we do not go to the, I would say, big cities and metros. We go to tier 2, tier 3 cities, wherein we can get access. And there are places where Morepen name is much better known, and we get good traction. Certainly, we are still growing.
Okay, all the very best.
Thank you, Ramesh. Thank you.
Thank you very much. That was the last question of this conference. I now hand the conference over to Mr. Vasupal Shah for closing comments.
Morepen Laboratories Limited.
Sorry, your line was in mute mode. So you may proceed now.
Hello, am I audible?
Yes,
Hello.
yes, you are.
Yeah.
Yes.
Thank you everyone for joining the conference call of Morepen Laboratories Limited. If you have any queries, you can write us at vasupal@careeradvisors.com. And once more, many thanks to everyone for joining the conference. Thank you, sir.
Thank you, Jay. Thank you very much. Thank you, all the shareholders. Good luck. Have a good day, and please stay home, stay safe. We have a enemy standing outside. Okay. Thank you, guys.
Thank you very much, sir. On behalf of Kirin Advisors, we conclude this conference. Thank you for joining us, and you may now disconnect your lines.